Hello and welcome to Hot Commodities and welcome to this Pulses special. I'm Manisha Gupta and the headlines on the show are: straight up and the pinch of pulses is giving the government a sleepless night. The markets have seen the prices run up quite strongly and the government really has come out with lots of steps. And stakes of rising prices are high for India. Remember, India is the world's largest producer and consumer, and India's output exceeds annual global trade of 15 million tons. And lastly, importers seek an exemption from the stock limit, vow to sell 100 tons of tur dal at rupees 135 on a daily basis. Well, the pulses space really seems to be giving sleepless nights, not to just the government, but the importers community as well. There has been lots of hue and cry as we look at uncharted prices, record high prices for many of pulses, especially the tur prices, where you have seen prices gain up above 200 rupees per kg. Remember, India is world's largest producer and consumer. Our annual consumption is higher than the global trade volumes put together of around 15 million tons. India has imported nearly 4.5 million tons in FY15, and the expectations are you could see that number gaining up to 5.5 million tons in FY16 as well. Of course, the Indian Importer Association has been talking about lots of stuff. They say that the imports from Myanmar, Africa and Canada will continue. They've actually vowed that 2.5 million tons of imports is what they are looking at in next 3 months. But remember, it has been the erratic monsoon, low yield in Indian markets that has Indian output, and that really is nothing new because for many years now you have seen pulses as a marginal crop in India, strongly dependent on monsoons, and that's the reason you are looking at this price rise. Of course, it comes into the festive season as well, and that's yet another reason that the price rise has not been able to be controlled, even as the government has come out with lots of steps there. Of course, not all of them have been appreciated by the importers and the pulses industry. On your screens is the kind of price rise that we have seen in pulses. Major, of course, coming in for arhar dal, which is up more than 40% in this year. And the other pulses also have run up quite strongly. The government steps have brought in some fear factor, and that is the reason you saw some profit taking. But the industry feels that because of these steps, you wouldn't see the prices come down for a longer period, and that the stock limit will have to be taken off. Let's get on board then. Hussain Arslan, who's President Global Pulses Federation, and he joins us on the show. Hussain, hi, good to have you. What's your sense, first of all, coming in for the Indian markets? How do you look at the situation, and do you see it easing as we go ahead from here?
I mean, the reason the price increase in India is, first of all, of course, this is reality, is the shortage of the rain. And the rain shortage is causing deficit on the crop. So we technically call this act of God. So in such circumstances, it's normal that there will be some price increases in related markets. But on the other hand, the crop in the northern hemisphere, like in major region like Canada, Russia, and Australia, is starting in August onward. Like September shipments will only be possible from India. So we are already in end of October, so vessels are started to come. I think with the arrival of the vessels, the market will show the reaction, like especially in yellow peas and also in desi chickpeas, and masoor dal, lentil will start to come. First vessel arrived recently, and I talked to our colleagues in India and other origins, and we noticed that at least 2 million tons of product is coming in next couple of months into India. At least this will help breathe the market.
Fair point, Hussain. Let's also get on board Yogendra Alag. He's an Indian economist. Mr. Alag, hi, good to have you as well. What's your sense? What do you make out of the huge run-up that we have seen in pulses? That's one part of the story, but the other is that the government steps haven't helped.
Well, let's take the second one first. I think this whole business of getting back to the Essentials Commodity Act and to, put storage risk limits and so on, we know that it doesn't work. You raid a few people. Basically, you've not added on a grain to the supply of pulses. So there is some short-term effects. but they don't matter much, and so that I think is really non sequitur. Yes, you have raided some stocks and got a few thousand tons, but that is neither here nor there. Now, as far as the underlying factors are concerned, remember we are growing very fast. And the income elasticity of demand for pulses is something like 1.5 to 2. It's not like wheat or rice where it's close to 0. So these are products where unless supplies are maintained, prices go up. On the other hand, I think since there's been generally food inflation, we should not panic. This business that prices have to be controlled, let there be raids on people. For example, right now I would also worry as to what are the signals that we are giving to the Indian farmer who for the Rabi is going to make some very important decisions of growing the pulse crop. And if we give him negative signals, short-term supplies are going to be less. The other thing is that we've done hardly anything in terms of better seeds, better extension. There was a committee that I chaired about 5-6 years ago. It laid out an entire map. By now, we should have been producing seeds which give us 2.5 tons of pulses per hectare as compared to our yields of which are something like 12 quintals. But hardly anything has been done. Sharad Pawar did a little bit, but after that again we've gone off to sleep. So we do need short-term strategies, medium-term strategies. We can't, everybody says import pulses in a big way. Well, if you import pulses and you subsidize them, then you are giving very negative signals to the Indian farmer because his price will go down. And the second thing is that basically by giving these subsidies, you are really subsidizing the farmers in Canada and Australia from where you are importing. So it's a very strange context. In a very poor country, we are not giving the necessary incentives to our own farmers and giving incentives elsewhere. It's like water leaking through water being put in a leaking bucket. There's no end to this. So we need a strategy for pulses. I'm not against imports in the short run. I'm most certainly against applying a Second World War Act on stocking limits and trade and so on, because you scare both the importer as well as the exporter and the trader, and that makes things worse.
You have a very valid point there, Dr. Alak, because it really has put a panic mode into the industry because you can't import, there is stock lying on the port, and there are concerns about that as well. Would want to get in a similar view from you as well, Hussain. What do you think, because you belong to the Global Pulses Federation, what do you think, how should India look at the medium term and short term outlook right now?
Yeah, I mean, in the today government measure is going to put a big panic into the markets. So this is going to cause turmoil. Imagine now what I hear from the market, because currently I am in Mumbai, and Mumbai is taking 50% of the import into the India. So now, if vessel comes, importer puts into the warehouse, he can be penalized for this. So what they are going to do, and how this measure is going to help for the bringing price down. It will bring price down in few days, but then it will, because of the shortage, again it will go up. So they should set up the system together to bring these goods as much as possible, as quick as possible into India at a market price. And this will stabilize the market, and this may bring price down. If we limit these things, we will have headache. Also, currently the stocks seized, etc. If they give time to these people, maybe 60 days, 90 days, to sell these stocks, and this will also help a lot to do in short term.
Well, the steps taken by the government have not helped the industry clearly, as we see into the markets there. And if anything, they perhaps are short-term measures. Hussain, how would you want to look at the future? I mean, what is the best way forward according to you onto this one? Is it about imports? Is it about yields? Is it about government taking steps for a longer term?
I think we should look at the matter in several ways. Today, what we should do, in medium term, what we should do, in long term, what we should do. Today, we should talk to associations how we can continue to supply chain and not to interrupt pipelines to be filled with the pulses. This is what we have, what people has to think. In second stage, to produce that kind of product in other origin, what alternative we have. And third thing is that how we can produce more pulses in India as per Indian needs. These things has to be taken seriously because Indian population is increasing. People's income level is going up, and they have purchasing power is increasing. When this increases, they are eating more pulses, and their need is going more and more. So these measures has to be taken seriously by the government and association, and I am the president of Global Pulse Confederation, which is the apex body of the pulses. In every respect, we are ready to cooperate on these items.
Point well taken. Dr. Alak, what would you say? I mean, you've really given out a list on what the government should be doing as we go ahead, and it really needs to be long-term strategies perhaps, because we haven't seen the acreage grow, we haven't seen the output or the yield grow. There isn't any talk about fertilizer, seeds, and even as it's a high-protein thing and India consumes the maximum pulses, we really have to depend on imports in some sense. At this point in time, when we are depending on imports via the government and the private players as well, would you say that because we are in the festive season, prices perhaps may even increase from here on?
I don't think prices will increase right now. There will be the short-term effects of these stocking limits. Then prices will tend to go up again, but they are at fairly high levels now. So if the imports are arranged, then things should stabilize roughly at the present levels. But of course, pulse prices are high. But you know, there are a number of very successful experiments that are going on. These are public-private initiatives. I was on the board of Tata Chemicals, and as you know, Rallis is one of our subsidiaries. And I encouraged them to get into the agricultural field. And the whole iShakti Pulse program operates through what we call producer companies. These are groups of farmers. Now, the producer company legislation came out of a committee that I chaired when Jaitley was Company Affairs Minister. So, groups of farmers in Pudukkottai, in Tamil Nadu, now in Madhya Pradesh and elsewhere, they get together. We give them seeds, we give them better practices, we assure them a price for getting returns. So production goes up. Now, these are the kinds of steps which we need to take on a much larger scale, because basically what happens is you protect wheat. Now, the farmer right now, on the one hand, you have the uncertainty. The trader is worried that the police is after his tail. And please remember that in the Second World War, when these things were there was a lot of corruption. I mean, you always had these sort of show examples, police has raided so-and-so fellows, this thing. But a lot of it, people were giving hafta and sort of going along. There was a huge black market. Now, the point is that as far as the farmer is concerned, he needs positive signals. We need to tell them that we will help you when you are growing these pulses. Let us bring in the private sector. There are big agro-based companies. I'm on the board of a number of companies, so I don't want to advertise their names. But a number of them are in this intermediation game. Let us involve them. Let the public sector support them. Let us get the ICAR into the game. The farmer goes into, I wrote a book on the future of Indian agriculture. He goes to what we call census towns, where there are 4,000 such towns, but we still call them villages. In other words, we are not supporting markets there. So you support markets. There is this bigger talk of, information technology and so on. वो सब तो पीछे आएगा, but first set up the basic infrastructure.
That's so true.
Support the farmer. Tell him, we are there. When you go to a small town in Dahod in Gujarat,
Absolutely.
when you go to a small town in Madhya Pradesh, we are there in the bazaar for you, so that he doesn't get a price of 50 rupees, and then he says it goes up to 200 rupees.
Which really is the case,
So
Dr.
once
Alak,
we
isn't
have
it?
these kind of strategies, I think we'll start competing with wheat and so on.
Yes. Well, absolutely, because the wholesale and retail price difference is yet another point that we need to discuss. But we will do that after this very short break. We'll come back and talk about the kind of stakes India is laying on as the prices of pulses run up so high. Welcome back, and let's get on board. Ashok Gulati, who's Infosys Chair Professor for Agriculture and Ag Career as well, joins us on a phone line from Delhi. Dr. Gulati, hi, good to have you. We have been discussing on the show on how the prices have run up and what have been the problems and how the government steps really haven't worked. What, according to you, should the government be doing now as a whole in the country to increase production, or where do we need to head now to, ascertain that the prices are controlled and there is enough supplies?
Yeah, I would say you need to think in terms of immediate firefighting measures, and then in the medium to long term, what can be done. As far as the immediate firefighting is concerned, you have no other option but to import, and import quickly. Now, the problem is you are the biggest importer in the world. So when you go to buy, suddenly you start demanding, let's say, 5 lakh tons of pulses under government contract. The international prices start shooting up because the suppliers like Myanmar or Tanzania or Mozambique, these are small players as far as tour is concerned. So the overall production in the global setting and trade is very limited. So you will have to pay a price. Remember, the price stabilization does not come free. And there are 3 methods to do it. One is the buffer stocking, which you did not do. Second is the trade policy, which if you go in the global market in a big way, it will increase the price, so it will cost you. And third is looking at futures and forward markets, because they give you a lead time of 3 months, 4 months, 5 months, what the market is likely to be. Now, you have killed that. You don't have buffer stock. So the only road open to you actually is the trade. Now, what you are doing is beating the traders and importers and others. This will give you a marginal temporary relief, damaging the medium-term to long-term perspective, because nobody would invest in stocking facilities at all.
So do you think that this pain can actually continue and we are looking at higher prices, or at least the current prices staying on for a longer time?
Not very long, because the new crop is likely to be hitting. It starts coming from 15th of November. Peaking will be sometime in December. So we presume that in December, the prices of many of the pulses, especially tur, urad, moong, they will start coming down. But then we have to get at present a very good handle on how much damage has been done because of the drought in Maharashtra, parts of Karnataka and Madhya Pradesh. So these are the 3 major pulses producing regions of the country. Now, if you don't have a handle on that, then again, before the next season comes, there will be a crisis because there will be no stock in hand. So you need to continuously track the production damage that has happened and accordingly take an action to continuously start importing at a low key so that, global suppliers don't take full advantage of your demand.
Quickly, 30 seconds more, Doctor. What's your sense on the prices then going ahead? Are we looking at a 5% decline from here on or a 5% increase? How would you look at the festive season in India in sense of pulses?
I think for the next literally 1 month, up to November end, the situation is going to be tight. If 5% comes down, that's no decline when prices have shot up by more than 100%. So I would presume that after somewhere in December, January, the prices will be down by at least 25-30%.
All right, Dr. Gulati, Dr. Alak, we'll let you go at that. Thank you so much, both of you, for joining us and giving us your sense on the pulses as a space in India and the fact that perhaps the pain may not continue for too long. Next couple of months, of course, are slightly stretched because the imports will not start coming in immediately. But going ahead, after December, the prices can come down for 20 to 25% as well, is the view coming in from economists. With that, it's completely out of the show. Thank you so much for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.